The usual disclaimer, and you can find an extended version of this presentation material on the web, and I encourage you to go and look at the additional information that we place within our corporate presentations so that you've got a chance to participate in the full story. I'm going to focus today on an update as to where the company's at in respect of our activities, where we expect to go in the short and the medium term. But really the main thrust of today's presentation is to explain some of what we think are the really constructive developments going on in our industry that have the effect of cementing the value in the supply chain that includes spodumene to lithium hydroxide, to the high nickel cathode batteries, which are definitely the story of the future. It's important that we dwell on that, because it's the main reason that we think we're in the right game. A lot of you would be familiar with us, Pilgangoora project, relatively rapid development in the lithium world to the point where it's now already a very big lithium raw materials mine, easily within the top 5 around the globe. Producing a quality concentrate, fantastic infrastructure base to work from in the Pilbara, one of the world's great mining jurisdictions. The combination of all those factors has meant that we've attracted a premium bunch of off-takers and participants in our company and in the project, and we feel very privileged to have them on board with us. So currently, at the Pilgangoora operation, it's, as Nick alluded to, it's the moderated production strategy, a disciplined approach to what are relatively difficult market conditions today, with a relatively weak demand backdrop. The only prudent thing to do is to back off the production, take some of the pressure out of the market, not have the stocks sitting there in front of your customers, and through that disciplined approach we've been able to maintain a really healthy cash balance and have ourselves set for the inevitable turn in the market. And again, I'll reference that a little bit more later in the presentation. We're really happy with where the team has got to in respect of our plant production and in particular recovery rates. It's fair to say that that's been a frustrating process, and it probably took us about 6 months longer than we would have liked to get to design recovery, but we're now well there. And when we turn on the plant, we do it with confidence in the knowledge that we're going to readily achieve 70% plus recovery rates. And as it stands today, we have a production run underway as we speak, and easily achieving the sort of run rates that we've described for design, 72 to 78% recovery, depending on the ore type that we're treating in any one week. So a great performance, second only to Greenbushes now, the old warhorse. The recovery rates that we're achieving are right up there amongst the top 2 globally. So it's a credit to the team, very, very proud of what they've been able to achieve. Why is that recovery so important? Because it speaks to our cost base, so that when we switch the plant on, we can be confident about the cost base that we're going to achieve. And with that, in the short to medium term, our expectation is that we'll get our costs down to sort of mid to low $300 a tonne, delivered to China for a dry product inclusive of royalties, shipping, sea freight, and the administration component that relates to our site costs. So a fully costed tonne delivered to China, mid to low $300 a tonne, once we get 100% of the operating capacity at the mine. In the meantime, it's steady as she goes in relation to the relatively weak demand conditions. We have a fantastic partner base. They've come to our project for a reason, for all the reasons I alluded to earlier. It's big, it's long-lived, it's a high-quality concentrate. We've had every man and their dog complete due diligence basically on that list as it relates to our project, and I can assure you they're all completely comfortable with both the design and the recovered product, and now the treated product as it goes through their systems. POSCO is a good example where they're using our spodumene in their demonstration plant, which is a pretty significant industrial scale plant, and they're producing the highest grade hydroxide that you could buy in the market today. So again, further evidence that the products are doing all the right things from the Pilgangoora project. In respect to POSCO, we love the relationship with them, and we're continuing to work with them on the downstream joint venture. And our expectation is that based on the recent rounds of engineering and the work that they have going on both at a project level and through their management teams, that they'll be presenting to the POSCO board during the September quarter. So that's the next round of updates in respect of the progress of the POSCO, the downstream POSCO joint venture. They're a great team, fantastic engineers, and we really enjoy working with them. All right, moving on, I want to spend a bit more time dwelling on the structure of the market, because there is some really important developments there that reinforce the value in the spodumene hydroxide high nickel cathode materials. Apologies if this in advance if this gets a little bit complex, but it's well worth dwelling on. Most of you would be familiar with the fact that there's two supply chains. The hard rock supply chain producing a spodumene concentrate, and of course that's where we participate via the Pilgangoora project. In contrast, there's the brine operations. The competitive advantage that spodumene concentrate has is rooted in its ability to be able to be chemically converted to lithium hydroxide directly. In contrast, brine operations, which fundamentally operate with a chloride chemistry, have to go to lithium carbonate first and then subsequently have more money spent on them to convert them to lithium hydroxide. So that's the competitive advantage in the spodumene world. Combination of cost to high-end lithium hydroxide, continuity and quality of supply. They're the competitive advantages. Now, a lot of people and a lot of industry analysts have said, well, that's to be seen. Well, I'm here to tell you today that it's already happening. And there is evidence to indicate that spodumene is getting deeply rooted into the hydroxide supply chain. On the left-hand side of this graph, we're looking at exports of lithium hydroxide from China to Japan and to Korea. Probably leading edge as far as high nickel cell making capacity is concerned. And in the last 2 years, there has been 4 times growth in lithium hydroxide exports from China to Japan and Korea. Why is that important? Well, almost universally, that export capacity is delivered via the spodumene supply chain, chemically converted directly to lithium hydroxide. So 4 times growth in 2 years, deeply rooted in the spodumene supply chain. By the way, it's not a coincidence that within that 2-year period, roughly, it was equivalent in demand growth to the scale of our stage 1 Pilgangoora project. In just 2 years, the equivalent capacity of our Pilgangoora stage 1 project was consumed. So it's happening, and it's happening quickly. Then when you dive a little bit deeper into the data and you look at Korea, what you find is that it is absolutely the case that spodumene converted to hydroxide has been cutting the brine operations lunch. They've been stealing market share. In fact, arguably, the brine share of hydroxide has actually been falling away in comparison to the spodumene sourced hydroxide. To me, the combination of those two things indicates that the spodumene is now deeply rooted in the supply chain. The link to hydroxide, the consumption of the hydroxide in high nickel cathode materials, it's all well underway, and hence the importance in our future. And what does that future look like? Well, it's a big deal. They are moving incredibly quickly, and some very, very strong incentives have been set up for the average consumer buying a car in Europe to buy an EV, to the point where it's probably in the range of 30 or 40% of the cost of the car is now being supported by an incentive. So very, very bold moves, really important for the future of our industry. And why is that so? That's because all those cars, well, virtually all those cars being sold in Europe will be based on high nickel cathode chemistries. It's a really important development for the industry, and it explains why the Europeans are now actively scouring through the North Asia, Japan, Korea, China, for the combination of battery raw materials, cathode materials, and of course cell making capacity. And Europe's becoming particularly important quickly. In fact, by UBS's estimate, this year, the market will overtake China in terms of consumption of EVs or the take-up of EVs. So a very important market happening quickly, and as I alluded to, particularly important because those cars will have high nickel cells in them, and hence the link to the historical consumption of hydroxide and spodumene as a result. So very, very important market developments. So what does that mean for the future? Well, the reality is we're just at the beginning. I mentioned earlier that in the last 2 years, roughly speaking, the amount of hydroxide grown in capacity related to about our stage 1 Pilgangoora mine development, which, by the way, is one of the top 5 mines in scale. And that happened in 2 years. And then where are we headed in the next 10 years? Well, for the amount of hydroxide expected to be consumed, you need 25 Pilgangooras. 25. Now, I can tell you, there is no way that today, at least, 25 mines of that scale are going to be developed in a short enough period of time to satisfy the wave of demand that's coming. And then, of course, the situation gets more and more acute over time. 75 Pilgangooras are required in the next 20 years. It's big law of numbers, and there needs to be a lot more mine development, and I suspect that the industry is going to get caught short. That's why we are confident that ultimately we're in the right part of the supply chain, and we will benefit from those market dynamics. In fact, you could arguably see some of that already happening. I don't know how many of you have been watching Ganfeng, but Ganfeng's a key hydroxide participant in global markets, Japan and Korea, and their share price has taken a really big run in the last couple of weeks, and it's happening because of the sourcing that's starting to emerge in global markets as everyone thinks about accessing battery raw materials. So what are we doing from here? Well, we're further refining our stage 1 operations. We're really proud of where the team's got to in respect of recovery. So as I said, second only to Greenbushes, very, very high recovery rates being achieved. That's important because it speaks to low cost. It's such a large resource and reserve that we've got the opportunity to continue to keep growing the mine as and when the market demands it and our customers need it. And of course, we continue to work on the projects that will ultimately deliver those expansions. We're also working very hard on the relationship in joint venture with POSCO on a downstream facility in Korea. That's an important part of our future, and we look forward to having more to say about that in the coming months. Thanks very much, ladies and gentlemen. Appreciate the chance to be with you this morning, and I look forward to your questions.
Thanks very much, Ken. Again, lots of questions, so I'm just going to cherry pick a couple. Firstly, an investor has asked, can we expect General Lithium to start taking stage 1 offtake later this year in line with the establishment of their new 60,000 tonne per annum lithium hydroxide plant?
Yep, no, good question, except the premise is probably not right. They have been taking offtake. The question with respect to the offtakers is their ability, in light of the current market conditions, to take the entire offtake position. But as to General Lithium, Ganfeng, Great Wall taking their tonnes, the reality is they've been taking some of their tonnes, just not all of their tonnes. Now, our position in respect of that is to just remind them, obviously, that they're not compliant with respect to their contractual position, but we also choose to continue to keep working with them because fundamentally they are still the best customers, the groups that are best integrated into the important parts of the battery supply chain.
Thanks very much. Another possibly slightly related question, an investor has asked, the SC6 lithium price was over $1,000 US a tonne when Ganfeng, Great Wall and POSCO agreed to their stage 2 offtake options. Is it reasonable to expect that they will continue, or will stage 2 finance require an alternative strategy?
Yeah, well, I can tell you, as much as we might fret about the current state of the market, it hasn't stopped any of our partners continuing their investments in respect of battery raw materials. So to highlight POSCO, I'd say they've been very active in the nickel sphere, the cobalt sphere, still building out demonstration plant capacity, optimising that. They're all significant investments that are being considered for the medium and the long term, not the short term. CATL is another good example, billions of dollars being spent on the combination of their supply chain and cell making capacity. And Ganfeng's about to commission another round of expansion capacity in the fourth quarter of this year. They're just on the public record in the last couple of days restating that. So do they and others for that matter require additional capacity in the short to medium term? I think the answer is absolutely yes.
Thanks, Ken. Maybe just one more before we let you go. An investor's mentioned that in your quarterly you flagged a possible restructure of your bond or a refinance. Can you give us a bit of colour about what your options are there and where that process is up to?
Yep, good question. So our objective in refinancing is ultimately to lower the cost of the debt facilities that support the company. You'd be familiar with the history. Nordic Bond established pre-development and supported the construction of our Stage 1 facilities. But of course it came at a relatively high cost. So there is merit, especially now, having gone through the first non-call period, which means it's less costly to replace the facility or at the very least change the facility, and therefore an important objective for the company. We're working hard on it. We still have quite a few options in front of us, combination of working with existing bondholders, a completely new financing facility, or a hybrid that involves strategics that participate in our business, whether they're off-takers or investors. So an important package of work, something we're continuing to work hard on, and probably more to say about that in the coming quarter or two.
Any rough timeline on when that might be?
Well, it's difficult to be definitive, but hopefully we'd have more to say about that during the September quarter.